Welcome to Pyramid Securities. This is a very important video. We're going to talk about market mantras. Market mantras from Pyramid Securities and Distribution. Market mantras. If you follow these mantras and repeat the same every day and be conscious about these mantras, you will not lose money in the market. You will pick right stocks. Okay, let's go to mantras. Mantra number one. You get recessions, your stock market declines. If you don't understand that's going to happen, then you're not ready. You won't do well in the markets. The recent example is like many of the recent examples are there. One was pandemic, then there was like Russian war. All these things are distractions will happen in the market. Your markets will climb the wall of worries. If the stock market experts are so they would be buying stock, not selling advice. It's another fantastic thing. There are a lot of people who come and give buy advice in the TV and they say they don't own. That is like that is something like that. If it's good, you must the person should be owning it. Then only there is value in that advice. Why diversification is required only when investors who do not understand what they are doing. If you don't understand, then you have to buy the basket, or you could buy the index. If you know, if you have a good story about a stock, buy the stock. Investing should be like watching paint dry. Basically, watching grass grow. It's boring. If you want excitement, go take $800 and go to Las Vegas. I can also tell you, you can if invest, or you can do futures and options, or you can do option writing or option buying and selling. Investing is like watching a paint dry. This is like a brilliant one. You must be a patient. Patience is the mother of all virtues, especially market investors. Market can remain irrational longer than you can be solved. Even I see somebody telling, irrational in the sense like, see the stock is a good value and the price is not going up. It'll take time. Each stock is in its own orbit and it's in a different direction. And when the institutional movers move in, the stock price will go up. So markets can be irrational. Irrational in the sense like the market crashed from 12,000 to 7,500 because of pandemic, and stock prices got lost. Nothing has changed in the stock price. Nothing has changed the fundamentals of the company between February 2020 and March 2020, but market crash. That's called irrational. So if you're so you must be sane when these things happen, and sensible, of course. 90% of the people in the stock market and amateurs like simply haven't done homework. They all buy because the TV channel said. They all buy because the auditor said. They all buy because Morgan Stanley is bought. But it is very simple. You'll understand if you keep watching our channel. Market mantra says individuals should act consistently as an investor, not as a speculator. If you are a retail investor, you can't outsmart the market. For that matter, no investor can outsmart the market. If you understand that, for example, we can't even outsmart a fellow human being. Okay, maybe for short while. In the long run, everybody will be smart. Markets are like that. The biggest risk of all is not taking one, waiting for 11th, waiting for 14,000 when it is 15,000. When it goes to 14,000, waiting for 13,000. When it goes to 30,000, waiting for 12,000. When it goes to 12,000, waiting for 8,000. So if you are waiting, you are always waiting. Okay. So you have to, I mean, if you want to make money, if you want to learn swimming, you have to jump into the pool. You can't wait for the water to get better. Know what you want and why you want it. Know why you want it. If you want a stock, you must be able to tell a story about that stock. You must be able to make a movie about that stock. If you don't, so that is what he's trying to tell, Mr. Peter Lynch, the greatest guy. Another big guy is like investment in knowledge pays the best interest. Investment in knowledge pays the best interest and also returns. It's not whether you're right or wrong, but how much money you make when you're right, how much you lose when you're wrong. George Soros is not only an investor and also a speculator. So he's given ideas. He's talking about speculation, investment both. So this holds good for any investor, any stock picking also. Don't look for needle in the haystack. Just buy the whole stack. What John Bogle says is buy index funds. Don't buy the stocks. Buy index funds. Index funds are better. The stock market is filled with individuals who own the price of everything and the value of nothing. It's a brilliant one. This is the mother of all and one of the best quotes I've ever read. Every individual know the price of everything and the value of nothing. Excellent. In investing, what is comfortable is rarely profit. Exactly. Now we come around 18,800 and say I'm a long-term investor. We'll tell ourselves that we are a long-term investor and he'll invest. But when it goes to 15,500, he'll wait for 14,000. So if you're an investor, you have to be you're not comfortable Now you're comfortable. Okay, anyway, it's already everything has gone up 20, 30%. Doesn't matter you're buying at a premium, but you're buying the trend, you can say. Courage taught me no matter how bad a crisis gets, any sound industry will eventually pay off. I mean, a lot of examples for this. A lot of examples for this. I already said in the previous slides. If you're shopping for common stocks, choose them the way you buy groceries, not the way you buy perfumes. Exactly. So you must be like a person who's bargaining in a vegetable market or with a street seller. You must buy stocks at bargain prices on a discount sale. You must buy a discount sale. We generally buy discount sale in the general markets, but we are scared when it's a discount sale in the stock market. Individuals who cannot master their emotions are ill suited to profit from the investment areas. Okay, emotion is very very important. Like you must have the mind of Mahendra Singh Dhoni. He's not technically very sound, but he's mentally very strong. I mean, he's good in his. He's got the capabilities, but he's mentally more strong than the rest of the batsmen. So people who have mastered their emotions can make money in the markets. The investor's chief for me universe tell me is likely to be upset. Yes, you are the person, man. You are the person who it is like it is mostly it is like telling that you are the responsibility. You are the man of your actions. You are the best judge. So you it is high if you're capable of committing harakiri. Okay? Because sometimes you want to buy, sometimes you want to sell, you want to do reverse. Design a portfolio or not like to trade akin to a pre-marital counseling advice. Try to build a portfolio that will live with it for a long, long time. So if you're a retail investor, or if you're a beginner, till I mean, at least you must for 8 to 10 years you must start. That's the accumulation period. By the time you learn everything, and then you can go. The next slide is one of the most important slides. You should please for you if you like all these 19, you will definitely like the 20th and follow. Please do. Next slide is a very important slide, and here it goes. 1, 9, 8, 7, 6, 5, 4, 3, 2, 1. Like our channel, watch our channel, share, and if you forward this to 9 people, I'm sure all the people will make money, or at least they'll pick up something from this. So please send at least each one of you forward to 9 people, and definitely they'll all bless you. Oh, next one is next one is thank you, thank you, thank you, thank you. Bye.